Okay, so the headlines are pretty intense right now. And look, it's totally normal to feel a little uneasy about what it all means for your money. So in this explainer, we're gonna cut through all that noise. We're gonna build a simple, clear framework you can use to navigate moments just like this one, without hitting the panic button.
You've seen this stuff everywhere, right? Headlines screaming about a World War III scenario. Social media is just full of it, and it can feel like the entire world is on a knife's edge. And yeah, trying to look at your portfolio while being bombarded by all that, it's unsettling, to say the least.
But hang on, before we let those headlines push us into making a move we might regret, let's do what we do best here. Let's just step back, take a breath, and actually look at what the historical data tells us. Because reacting is easy. Responding thoughtfully, that's what really counts. So, first things first. Let's put today's fears into some kind of historical context. I mean, when you look back at dozens of geopolitical shocks over the last, say, 50 years, a really clear pattern starts to show up. So, what does that history actually show us? Well, markets almost always drop pretty fast in the first few days of a crisis. But the average drop, from the peak to the bottom, is only about 4 to 5%. Now, don't get me wrong, you'll definitely feel a dip like that, but it's rarely the catastrophic collapse that the headlines make you think is coming. And here is the really crucial follow-up to that. The recovery from that initial shock, it's often surprisingly fast. We're talking about markets getting back on their feet in a matter of weeks, not getting stuck in some kind of downturn that lasts for years and years. And this chart, wow, it really puts it all into perspective. If you just zoom out 1 year from one of these big, scary events, you can see that about 3/4 of the time, the S&P 500 was actually higher. It's a pretty powerful reminder of just how quickly markets tend to process bad news and get back to business. Now, I have to be really clear here. This is so important. None of this is a guarantee that this time will play out the same way. Every single situation is unique. But understanding this historical pattern gives us invaluable context. It helps us separate that initial emotional shock from the potential for a real, lasting economic problem. But not all shocks are created equal. And that historical pattern we just looked at, it can break down if one key factor gets involved: oil. And this is where we absolutely have to learn to separate the real signal from all the background noise. To really get the oil story, you have to understand this one place: the Strait of Hormuz. Seriously, think of it as the world's single most important oil artery. A massive chunk of the oil that powers the entire global economy has to squeeze through this one tiny channel. If that gets clogged, the whole system feels the pain. So this is how you can tune out all that noise. Just ignore the crazy social media posts. Forget about the frantic minute-by-minute swings in the market. The real signals are way, way simpler. Number 1, are oil tankers still moving through the Strait of Hormuz? And number 2, is the price of oil staying really high, let's say over $100 a barrel, for weeks at a time? Those are the signals that actually matter. And that brings us to the next level of this whole thing, what I call the danger zone. This is the set of conditions where a geopolitical shock can go from being just a temporary dip in the market to a much more serious, systemic problem for the whole economy. And believe it or not, there's a specific recipe for it. This is the recipe for a real problem. So, step 1, you start with an economy that's already kind of fragile or is dealing with high inflation. Step 2, you add in central banks that are already hiking interest rates to fight that inflation. And the final key ingredient, step 3, you layer on a major sustained disruption to oil that sends prices through the roof. That combination, that's what can turn a temporary market scare into a genuine economic crisis. So, to put it as simply as possible, the risk isn't just the missiles. The real risk is that 3-part combo: the conflict plus a sustained oil shock plus a pre-existing fragile economy. That is the mix we need to be watching for over the next few weeks, not just what's happening in the next 24 hours. Okay, so with all that context, let's bring it all back home. Back to you. How do you actually apply this framework to your own decisions? This is your personal playbook. It's all about how to respond thoughtfully instead of just reacting out of emotion. So, before you even think about hitting that buy or sell button, just run through this quick mental checklist. First, whatever you do, stay away from the first hour of trading. It's pure chaos and emotion. Then just ground yourself in your reality. What's your time horizon? What's your actual risk tolerance? Do you need any cash in the near future? And hey, how diversified are you already? Start by asking yourself this really basic but totally fundamental question. Are you investing for next month, or are you investing for the next couple of decades? Because, let's face it, a scary headline about today's conflict means something completely different for a retiree than it does for someone who's 30 years old. Then, you've got to ask yourself this big one. Did you invest in a company or a fund because you believed in its story for the next 10 years? And if the answer is yes, have the events of the last 48 hours, have they truly, permanently broken that story? And you have to be really, really honest with yourself here. Is that urge to sell coming from a genuine change in your long-term thesis? Or is it an emotional reaction to fear being driven by the scary headlines you're seeing and all the red on your screen? Telling the difference between those two, that's everything. Because at the end of the day, it all boils down to this one question. Are you going to let the headlines manage your portfolio? Or are you going to manage your portfolio through the headlines? The choice is always yours.